evening and welcome to another edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I'm Laddie Williams. Let's get a check now what played out with the markets, the global markets that we track on Friday. We see European markets resumed the sell-offs on Friday as U.S. tech stocks, the volatility there, that's spilled over to the Atlantic. Once again, the pan-European stocks 600 ended the session 0.4% lower with major bosses and most sectors in negative territory. The regional stocks Europe Technology Index closed 2.3% lower to trade at its lowest level since September 16th. And we're taking on to Asia now. Asia Pacific markets fell also on Friday after U.S. tech stocks. They lost ground investors' hopes of a December rate cut by the Federal Reserve. That faded. And Japan's Nikkei 225 tumbled 2.4% to close at 48,625 points. While the Topics Index ended the day flat. Tech conglomerate SoftBank plunged more than 10%. Other tech stocks on the index extended declines with Avantis stumbling 12.1%, Tokyo Electron retreating more than 7%, Lasertech falling over 5%, and Renaissance Electron down 2.65%. Japan's core inflation in October rose at its sharpest rate since July, in line with market estimates on Friday, supporting the case for interest rate hikes by the Bank of Japan. Let's take it on to U.S. now. We see the Dow Jones Industrial Average that rebounded on Friday after New York Federal Reserve President John Williams suggested the central bank could cut interest rates yet again this year. The blue chip index gained 493 points, about 1% to close at 46,245 points. The Nasdaq Composite advanced 0.88% to settle at 22,273 points, while the S&P 500 finished 0.98% higher at 6,602 points. The three leading the indexes in the U.S. finished Friday's session with gains. The S&P 500 rose by 0.98% to 6,602 points. So, definitely we saw that recovery there, but definitely a weekly loss if we're looking at it on the overall week to date. All right, let's bring it home now. The NGX Securities Exchange closed the week lower as the index rose by 0.51%. Market cap stood at 2.16 trillion. Trading activity was negative. Volume was down about 88.62%, 2.9 billion units, valued at 95.46%. We see the picture there. Deals also in the red. So that was a rise 0.51%, 3,613. And the market cap, that's at 2.16 trillion naira. Let's look at the NGX performance now. Yeah, it was a negative performance there for the NGX. We see the NGX closed about 2.24% down, a big drop there. The market cap, 91.41 trillion, 2.23% activity. Compared to the previous trading week, we see it was all red. Down there, and definitely if we look at other parts of the market now, let's look at sectoral performance. For the sectoral performance, we see banking 3.85% down for the week, consumer goods 0.44%. The biggest drop we have for insurance counter there, 7.05 to dip, a big drop there for the insurance counter. Oil and gas 1.61%. So definitely quite a bloody week for most of the markets that we track. Bitcoin heavily hit this week, and also gold wasn't left out. That's supposed to be the safe haven, and yeah, we saw a big drop also for gold. All right, to our conversation now. Today, we're going to break down a turbulent week across global and local markets. NVIDIA's latest earnings, that was in focus, raising big questions about whether the AI boom is still powering ahead or starting to show signs of fatigue. Wall Street U.S. markets have been under pressure, struggling to find direction amid renewed concerns about interest rates and slowing demand. Risk assets are also feeling the heat from a sharp pullback in Bitcoin to sell-offs across major equity indices. And here at home, the NGX was not spared, with profit-taking, cautious sentiment, driving declines ahead of the next MPC meeting. So we're going to unpack what's driving the moves, what investors should expect, in the days ahead. Next week, that's the last trading week of November. Joining me now, we have Dr. Oba Jeremiah, Chief Investment Officer, VNL Capital Asset Management. Joining me right here in the studio. It's great to have you.
Thank you for having me.
Fantastic having you spend your weekend with us. But it was quite the week.
It was quite the week.
Yeah, for markets. And it just hit me, I believe, yesterday. Festivities are ahead, at this point. I guess it's expected that investors would take profit.
Yeah, investors are taking profit.
Right.
But it's kind of different, and it's depending on where you're looking at. So in the US, we're seeing sell-off. In Bitcoin, we're seeing sell-off. And in Nigeria, we're seeing sell-offs. But it's not just profit-taking. There are fundamentals to it. So which one do you want me to start first?
Let's start with the US, at this point. We got NVIDIA earnings. It was good.
Yeah,
awesome. Lifted the market on the day, but that fizzled away, really fast. And, the thought has been, earnings kind of drive the market, but it's not driving this time.
Yes, the market is listening to everything right now. So NVIDIA's earnings blew the market away, and pre-market, we even saw the capital market go up. But eventually, we had two macro data come out. And even though non-farm payroll did exactly well, the unemployment data shocked the economy, and we saw stock market start trickling down in respect to that. So if there's anything we know, is it's very difficult to be a trader during these times, because sometimes you see news that's supposed to take the market up and the market is going down. And even news that are supposed to take the market down, the market is going up. It's very volatile, but one thing we can see is that there has been structural cracks. And if we look at how markets are related, because we cannot look at things in the words of Ceteris Paribus, right? We need to look at the interrelationship between markets. You see that Bitcoin is taking a lead, is kind of like a leading indicator to the stock market right now, because when it comes to exiting a position, we see that Bitcoin has done massive sell-off. And because of the high liquidity, we see that investors are exiting through Bitcoin. And if you look at the correlation between the S&P and Bitcoin, they are actually positively correlated, right? But now there's a divergence. Even with the drop in the stock market, Bitcoin is still falling faster than the stock market. It could be that the stock market even has more ways to go down.
Right, but we're going to get to Bitcoin's performance, because that all the gains this year
definitely
technically wiped off.
Yes.
For Bitcoin. But let's still circle back to this NVIDIA, because there's also been that talk about the AI bubble. Right, and the CEO did say, what bubble? There's no bubble. Looking at the results, from the latest results from NVIDIA. And I'm wondering, is that AI bubble really not going to happen according to him, or is this optimism just, in his head?
Well, the truth about it is that unlike how it was in the dot-com crisis, right, these companies are actually investing more and getting huge revenues, right? But it's a race. I'm sure you don't know what Archie is, right? Because Archie is one of the first social media platforms, search engine platforms, and Google was 27. So right now we are hearing names like NVIDIA, we're hearing names like OpenAI and Palantir leading the race, but nobody actually knows when it's going to land. And because of that uncertainty, right? Because of that uncertainty, the market is panicking, and the market is saying if there is any hint of signs to crack, the market will go down fast.
Right. All right. So at the end of the day, I guess AI stocks, they're not out of the woods yet.
No, definitely. But there's still some upside to go. Even though the Fed's chances of cutting rates have moved from 90, where it was a month ago, to now 70 something, right? A rate cut could still push the market upwards, but holding the rates is another macro factor that could even affect not just crypto, but even the Eurobond market.
Right. And, talking about crypto at this point, about 12% drop this week alone. That's for Bitcoin. Ethereum led with about a 13% drop. Also, trading around the $2,763 level. So a lot of money has been shaved off the crypto market at this point. I guess it's official. This is a bear market.
Well,
for crypto?
definitely we're entering into bearish territory, right? So there are two theories to this sell-off, right? On the technical side, the technical analysis, people reading charts and patterns, trying to look at the next way forward. We see that Bitcoin, when it's having a bullish run, has a bullish run over 1,000 days plus, right? And when it's having a bearish run, it has a bearish run towards a year, 365, 360 days. And for the last bull, from when you look at from the last all-time low to the all-time high, it's almost exactly 1,056. And if we are looking at it again, that pattern might try and repeat itself. One thing we could also know is that on a weekly time frame, we have seen that Bitcoin has crossed the 50-day moving average on a weekly time frame. And that's a good indicator that the last time Bitcoin crossed it, retest, and went downward, it almost had a 65% correction. So there's a possibility that we could still see crypto around $60,000, right? Because it's a asset class that has an habit of correcting over 60 to 75%. So even with the bearish territory, it's something that we should look at, but this is crypto. We understand that there is this pullback, and that's on the technical scale. On the macro scale, we are seeing stuffs like the carry trade from Japan. Japan is increasing their stimulus, which is raising their yields up, and there's no more free money and easy money. And this easy money has found itself into leverage assets like Bitcoin. And once this is winding down, it's going to mean people are selling off, which could also mean we could still have bearish crypto for the next 1 year.
Right. And definitely, we have investors here in Nigeria that, trade Bitcoin, they trade U.S. assets, and I'm sure some of them will be looking for direction. Yeah. At this point. So is it to dollar cost average, at this point? Are you buying the dip? Some will say, I can't buy the dip anymore. I don't have any more money to buy the dip, at this point. So what do you do with this?
So the truth about it is that the fundamentals for Bitcoin has never been clearer. We have institutions buying Bitcoin. We have countries buying Bitcoin. We have the regulatory framework setting up for Bitcoin. But the truth is, the early, let me call them OGs, that invested in Bitcoin, we have seen liquidation worth 8 billion. If they did that, let's just say 5 years ago, 6 years ago, they would have almost tanked the market. They would not have sufficient amount of liquidity to exit the market and for it to not cause chaos. So right now, when we are seeing institutional money like the BlackRock, the State Street, and the Vanguard ETFs buying a whole lot of Bitcoin, we see people that have been holding it for a long time selling off. So if you really think Bitcoin is going to get to $1 million, right? A pullback is supposed to be a good entry because we have seen it recover. So dollar cost averaging is not necessarily bad, but what you need to understand is the outlook. Are you looking at in the next 1 year? Then it might be a bad time to buy. But if you're looking at the next 10 years, then it's all well, buy your
Right. If you're looking at the next 10 years, and we remember what Warren Buffett said about invest in an asset class.
Yeah,
if you
definitely
can't hold it for 10 years, don't touch it.
Exactly. Exactly.
At this point. So, definitely we always have investors that come in when the market is noisy, when everything is going up, and they end up buying the top. Maybe some bought at $120,000.
Yeah.
For Bitcoin.
Yeah.
What do you do? You at this point, do you just sell now, take your loss, or just hold on?
So
what's the trade?
So investment is not in isolation of your expenses, right? And it's also not in isolation of the opportunities you can get in the market. If you know taking a loss now is holding your liquidity constant when you could see other opportunities in the market, it means you might take a loss. But if you don't really need the money now in the next 3 years, it might mean you could hold up. But we see that the recovery path for Bitcoin on a bullish one is almost 1,000 days. So you can never really predict it and catch the bottom. But right now, the bearish environment, and who knows, we could see Bitcoin come back up and surpass the all-time high, right? We don't know yet. It's hard to know. But the macro factors are good. The technicals might not be looking that good. But if one thing is sure, there is definitely a 200K Bitcoin in the future.
Right, and some of us, at this point, we're still looking for that dirty December money. It's certainly upon us. So some investors are already taking some of that money out, at this point, so they can have fun. All right, but we'll drill down on what also played out in the local markets That's on the NGX. It was 5 consecutive days of losses here. We'll also, get a technical analysis there and see what to expect next. But we'll take a quick break. When we come back, we'll drill down on the NGX. That's in a moment. Just stay with us. Welcome back. Well, we're still unpacking the big sell-offs from this week in major markets. And Dr. Uba Jeremiah, Chief Investment Officer, VNL Capital Asset Management, still with me right here. Thank you for coming on today. But, definitely the sell-offs, it was almost everything. Even gold, wasn't left out. I will see for the NGX, 2.24% shaved off from the all-share index. I remember the previous week, we had 2, days of losses, Monday, Tuesday. Then from Wednesday, the gains came. And then there was so much talk about, the capital gains tax. That's why investors are selling off. Then we had the finance minister, calm nerves. Then the market started going up. We'll come to this week, and it's red again. What do you think is driving sentiment there?
Well, I think the market is showing a signal that, you need to do more than talk. Right, we need to see that proper legislations are made, because we had stocks moving as high as 500%. So putting $1 million there will give you how much? And if you sell now, you just pay 10%. Why? If you hold it to January, it qualifies for you to pay 30%. Obviously, market participants will definitely sell off now. And this affects a lot of institutional investors, a lot of HNIs, right? So talking to your finance guy, he will tell you, okay, it's better you sell now than look for more opportunities. And what is driving the selling, even if you wanted to hold to next year, and you see that a position has done 100% and now is down 70, you would like to take your profit and be like, okay, let's see where this downturn is coming to. So, and more about it is that we cannot definitely decouple who is selling. Yes, we know that institutions are rebalancing their portfolio and taking profit, but the whole Trump rhetoric is not helping the Nigeria situation, right? So the fact that the United States has made Nigeria a country of particular concern shows that investing in our capital market can be questionable if you are a foreign investor, right? But the major bulk of it is laying on the tax policies, right? We are having the highest tax rate in the entire emerging Africa, which is not necessarily good, because we need to build a $1 trillion economy if everybody's in tune with the vision, and that economy comes with a lot of capital investment. So taxing capital investors, 30%, it to me is like a slap on the wrist for coming to Nigeria. Yeah,
that's definitely a tough one. And talking about this, Trump's designation of Nigeria as a country of particular concern, could that be a major driver also, for the downturn that we see? And how much of that, is bad for business? We know insecurity is definitely bad for business. Mm-hmm. How are you seeing all of that play?
Definitely. So it's depending on the proportion of foreign investors in the NGX, right? So last I checked, we still have a majority of local investors invested in the NGX. So even a pushback is not necessarily going to move the market in some ways, right? But it's definitely having some rhetoric. Where we could see it is in the bond market, for example. Nigeria just issued a Euro bond that came in my perspective, slightly higher than what they should, because our global macros are looking, if I should say, impeccable. We're on a trajectory to 5.1% GDP, and our exchange rate has been stabilized and appreciating. Our reserves are moving upwards to a trajectory of almost 50 billion. There's no way we should be coming in close to what Angola is coming to the market with with comparable reserves of 20 billion. We are a more stable economy, more vibrant, but the whole Trump rhetoric gave a perspective of an insecurity. We'll probably be one of the highest yielding Eurobonds coming forward, because we see that the United States on part of pushing rates downwards.
Right. And what kind of conversations, wealth advisors, asset managers, what kind of conversations are you having, right now when it comes to the kind of handling you want to see from the leadership of Nigeria, with this insecurity matter and the designation from the U.S.?
Well, the truth about it is that when it comes to, if we're looking at it on a macro scale, we have fiscal policy and monetary policy barring the capital gain taxes, right? Doing the best they can do, right? We are on a trajectory of actually growth and trying to heal from some type of economic downturn, right? So, if not to downplay the insecurity that is happening in Nigeria, but insecurity is a problem almost everywhere. And if the goal of the United States was to actually help us, I feel there must have been a diplomatic part that they should have explored. What about ammunition? What about surveillance, right? So if they explored this part and they were refused, it's a different game. But looking at a country that is on a trajectory of growth, come on, our rating agencies have even given us a higher rating, and just throwing turbulence is to me is dangerous, because we have seen fights on social media, and if I say so myself, we haven't even seen the emboldeness of some of this terrorist group to take more action since this has become mainstream. I'm not saying that these actions are not horrible, right? But I feel there's a diplomatic part to go towards it. But the truth about it is that I kind of like think Tumble is a good man for the job, right? Because all stories apart, he's somebody that is not doesn't have a habit of losing. You know, we have seen that he has never even lost an election, right? So if there's anybody to deal with the rhetoric and look for a path to succeed, I think I have a vote of confidence for the president. He has also shown that he's looking for a way to decouple himself from the dollarization by making some BRICS alliances. The truth about it is that Nigeria is a strategic country, and the destabilization of Nigeria is not just going to affect Nigeria, it's going to affect Africa, and also turn some other African countries to other neighbors like Asia or Russia. So if it's about a tactical standpoint, I think the United States has better to achieve by being allies of Nigeria and addressing any insecurity issues, rather than causing more rhetoric and turmoil for the...
Yeah, because it's quite interesting, you know, inflation, that's, you know, been dropping.
Definitely.
We had growth, you know, for GDP. Naira has been, you know, relatively stable.
Yes.
And also, you know, getting some ground at this point. And then we get this, but maybe it's a reality check.
Well,
that we should also check on our security.
It's definitely,
you know, at this point, let's
check.
improve security in the country. That way, we don't have to go beg investors, you know, it's coming, and we local investors feel comfortable, you know, actually investing here. So, you know, going into next week now, the MPC, the inflation story, that's supposed to be good, you know, for the MPC. The Naira, you know, also, you know, it's still being stable. That's supposed to make the job easy, but it almost seems they will also be concerned about what's playing out. That's
definitely.
The tag of country of particular concern.
Yeah, I think
for the MPC next week.
I think it's something that the Monetary Policy Council must look at, listen, and check how they can mitigate some losses, because we don't want to erode the gains we have made, right? And another way to erode the gains we have made is by cutting rates too fast. We understand that we have been net exporting, but capital has actually been flowing. But the type of capital that has been flowing is hot money, capital that would exit at the first sight of fear. So we need to keep on attracting this hot money in some ways, and not being too hasty to drop rates. If we drop it in, well, I know definitely we are going to see 1 or 2 25 basis cuts leading to next year. But I'm hopeful that the CBN will see the value in maintaining gains and currency stability over just reducing rates, because I don't think that we have seen sufficient gains enough in inflation. A major aspect of our inflation component was the food inflation, and we have seen it decelerate and overshadowed by rent, which is a component of core inflation. So this is actually more troubling. And the core inflation, yes, rent. That has increased faster than food right now. The structural problem of food was that food at farm gate is cheap, and food at marketplace was expensive. Even though it's decelerating, we know that the structural, like the roads and everything, has not necessarily been fixed. What we are seeing is the effect of the rebasing. But what is choking out is that even despite the effect of the rebasing, is the rent cost. We expected that, since inflation is trending downwards, landlords are not going to increase rent. I'm going to tell your landlord that inflation is 16% now. You understand? People are still facing heavy challenges when it comes to core inflation. So it's not something that we could just, we went from 33% to 16% and we say kumbaya. If we look down granularly to the numbers, you see we are not out of the woods yet.
Right. And there's also the element of transport costs.
Definitely.
In there too. So are we seeing continued profit taking next week on the NGX, or?
So the truth about it is that the NGX, and this is a free non-financial advice, but
right.
The NGX, given the trajectory of the Nigerian macros, is a buy the deep opportunity waiting to happen. Because regardless of the profit taking that happens in December, we still see these institutional investors need to rebalance their portfolio, and there's a regulatory portion that must enter back into the capital market. So whether you like the taxes or not, you have to go back into the capital market. Like I said, the NGX has done on an average 40%, and it's probably supposed to be the best performing stock market this year.
Right.
If you made 500% last year and you're thinking about the next year, you need to go back to that market.
Okay.
So if you see retail investors buying the dip, they are definitely going to smile before Q1, Q2 any season.
All right, so much to unpack there, and definitely we hope that there's some respite, going into next week for some people that came into the market late and are still trying to hold on, at this point. Thank you so much, Dr. Uba Jeremiah, Chief Investment Officer, VNL Capital Asset Management. Thank you so much for coming on today.
Thank you for having me.
All right, and that's the show. Thank you for watching. Hopefully you make profit next week. I'm Ladi Williams. Bye for now.